Let me tell you something. I've been a rich man and I have been a poor man, and I choose rich every fucking time.
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. Guys, this is a big video. I hope everybody had a fantastic Thanksgiving Day weekend because you need to be rested and relaxed for what's coming this week. We have the final 9 days. I believe the bear raid can continue in crypto, the up and downs in the market, the rallies, the sell-offs, because after 9 days, come December 10th, the Fed is cutting. Futures market, price it in with almost 100% certainty you're getting the cut. Today, as a matter of fact, the Fed ended quantitative tightening. These are liquidity catalysts. Last week, we had cryptos and the stock market put on Thanksgiving week rallies. And then today was Bloody Monday in the crypto space, and you got a sell-off. So we're going to examine the charts because my base case, as you guys know, is 140 to 150K Bitcoin. And I think you get there in January 2026. Q1 2026 is going to be bullish overall for the markets, and I think you can see crypto make a new all-time high sometime in January as well. So I want to show you this, and it's a perfect day to make this video as Bitcoin was selling off today. Let's see if it's changed any of our structures. Let's see if it's changed any of the biases that I personally have in the market. Guys, if you want to trade these markets, trade these cryptos, check out SimpleFX. We have a Christmas tournament going on right now. It starts today. You register with our link. If you already have an account, just throw on a deposit of like $1 or something. It automatically puts you into the tournament. But everybody else, you'll be automatically registered with our link if you open an account and participate in the Christmas tournament if you live outside the US and Canada. Everybody else that lives inside the US or Canada, check out Bitunix. You can trade the cryptos there as well. You guys want to join our Discord or get our market maker videos on YouTube? Click the join button right there on YouTube. Get all of our content. It's going to be a busy couple of months with the markets. So let's start off here on Bitcoin. Here's my bearish setup, right? Been sharing this for over a year. If I'm wrong, if my bias is wrong, I've had a strong year, as you guys know, but if my bias is wrong and we end up having a bearish marketplace, you still have a major rally in the books that's cooking right now. 3 peaks, peak 1, peak 2, peak 3 in a domed house. Your head and shoulders, left shoulder, head, right shoulder. That rally up for the right shoulder should take you to 109, 116 on Bitcoin. We can verify that as well, pulling a fib down from the head to the base. 109 to 116 and a half. The kill box, 618, 786. At a minimum, that's where I believe you would be going. And off that low of 80K, you're looking at a 35,000 point rally to the 786. Who doesn't want to be a part of that? What I'm planning on doing is being long here at the base and then making a decision when it comes up to peak resistance. Is this going to be a bearish moment or a bullish moment for a new all-time high? But in the meantime, guys, looking at longs in the marketplace, because I believe you have a big move, snapback move coming back to the upside. Been sharing this pattern for over a year, the bearish case. Now, a lot of people are asking about the 50 weekly moving average. A lot of people are talking about it on X. I know there's YouTubers talking about it. If you're not familiar with what people are talking about, the concept goes like this. Whenever you have, according to the people that promote this idea, 2 weekly closes below the 50-week moving average, you have a bear market. Hence, we have 2 weekly closes. Now we have 3 weekly closes below the 50-week moving average. Therefore, ergo, we should be in a bear market. So when somebody told me that, I said, well, how long has this actually worked, right? Whenever you're looking for a pattern, do you just have one incident of this, or do you have a multiple incidents of this? And what's the effectiveness of it and relevancy of it? So let's just go back. Where did this occur in the last 5 years? Well, it's occurred twice in the last 5 years, not counting the current time. Where did it occur? After the 2021 top. 2021 top, 2 weekly closes below the 50, got a big rally, then capitulation. See, you got 2 weekly closes below the 50. Ergo, you're in a bear market, okay? You just did that in the current price action. You did it back in 2021. What most people skip over is what happened in 2020, right? What happened in 2020? If you look at 2020, this is the pandemic, right? The pandemic sell-off. You had 2 weekly closes below the 50. The second weekly close marked the actual bottom in the market before Bitcoin went on a 1,600% rally. Let me repeat that. The second weekly close below the 50 marked the bottom to the candle before Bitcoin went up 1,600%. If you were using this 2 weekly close rule, you're in a bear market. Guess what? Would you have been positioned for that rally? Probably not. Let's go back another cycle. What about the 2017, 2018 cycle? When you got 2 weekly closes below the 50, surely you're in a bear market, right? Well, let's just validate that. 2 weekly closes below the 50, 69% decline. Okay, so before you had 2 weekly closes below the 50, the market declined 69%. Understand something. This data point is irrelevant. If you were holding coins through a 70% decline in the market, waiting for 2 weekly closes below the 50 to determine whether or not you're in a bear market, you were absolutely destroyed. And honestly, find another hobby. Take up gardening, ukulele. You should never hold something through a 70% decline to wait on some type of silly rule like 2 weekly closes below the moving average. So just to recap this real quick, going back to 2018 cycle, you have had a total of 3 times that you've had 2 weekly closes below the moving average, right? Looking for a bear market. The current time where you are now, back in 2021, you had your 2 weekly closes, and then sure enough, you did get a bear market. And then in 2020, you had this with the second weekly close marking the actual bottom in the market. Now, to go back to 2017 and 2018, if you want to count that, you declined 70% before you got a second weekly close. Again, statistically irrelevant. Nobody's holding that for a 70% decline. So if we just look at this, bottoming on the second candle, second weekly close in 2020, and then of course the bear market there in 2022, they cancel each other out, right? I don't see a pattern there. That's not a pattern. As a matter of fact, what's more interesting to me is that second weekly close in the current price action. Guess what that did? That put in the actual low with the lunar low, just like in the pandemic. The actual low may have occurred on the second weekly close below the 50. That could be the pattern. The pattern may be the second weekly close gives you the bottom, just like it did in the pandemic, and not the bear market. So again, multiple ways to skin a cat. Depends how you want to look at it. But I wouldn't use something so arbitrary as something like a death cross or 2 weekly closes below the 50. Because again, when you do any type of analysis on that, how relevant is it? How many times has it occurred? And what percentage was the market down prior to it occurring? All these things matter. Let me show you a more useful moving average. As you guys know, I like RMAs. The 50 RMA. More useful, get more information out of it, and it plays out for what I want to show you. Where are you right now? You're just below the 50 RMA on the current price action, right? You got to come up a little bit, get back above it. You're just below it. Where else did you hit the 50 RMA? Well, back in 2022, you hit the 50 RMA. And when you did, you got a 46.5% rally to the upside, bouncing off the 50 RMA. You knifed below it a couple of times, 3 times actually, and then you got a 47% rally to the upside. What about 2020? Well, we already know that. You got above the 50 weekly, you got above the 50 RMA, you did a 1,600% rally to the upside. What about over here back in 2017, 2018 cycle? When you came down to the 50 RMA, you rallied up 47%. 47% rally in 2022, hitting the 50 RMA, 47% rally, hitting it over here in 2018. What about this price action here in 2019? Because as you can see, you hit the 50 RMA, right? You got a decline from June 2019. You got a couple candle wicks below, just like all the other times, below the 50 RMA. And then you rallied up 63.5% off the 50 RMA. So this to me is an actual pattern that is actionable based on the price action going back all the way to 2018. 7 years of data. This has played out several times now. We can look at this. It played out here, 2018. It played out in 2019. It played out in 2021. And where we are right now in 2025, will we see this play out again? Well, a couple of different things here. If we look at natural movements in the marketplace, right? What's a natural movement? A wave movement. Price goes up, price pulls back. Price will snap back. Does that snap back take out the high? Or does that snap back up, down, form a lower high, giving you a double top in this situation, breaking the neckline, and that's your short right there. Well, you look over to your right, that's what this pattern is. It's a head and shoulders, right? Left shoulder, head. If you get the snapback rally to the upside and it fails, that's bearish, right? That's bearish. If it fails, rolls over, ultimately breaks the neckline, that's your bear market. And where we are right now, struggling with the 50 RMA, looking at the previous 3 times we hit the 50 RMA, getting at least a 47% rally. Let's just do a little bit of math here. Where would that take you off that 80K low? Off that 80K low, 35% takes you back up to 108K. That's a 30,000 point rally, right? And go to the 786, that's a 36,000 point rally. That's a 44.5% rally. A rally, you say, well, why would you get 44.5%? Well, again, you're just looking for patterns, right? Every time since 2018 that Bitcoin has hit the 50 weekly RMA, you've done at least a 46% rally. You did 47%, 63.5%, and a 46.5%. So again, you have 3 instances where this played out 100% of the time versus the 2 weekly closes below the 50 simple moving average, which played out 1 time in 2022 and marked the actual bottom in 2020. So there you go. Choose which way you want to look at the market, but I see this as bullish and I see a big rally coming in the marketplace. We switch over to Lunar Cycles real quick. Let's look at Lunar Cycles. We bottomed the day after the Lunar Cycle change. Bitcoin rallied up 15.5%, and now it's down at the time of this recording 6%, right? So gave up a lot of that rally. We see that a pivot's coming up here on the 4th of December. Again, the Fed is cutting on the 10th. Could this pivot mark the higher low? Your low, your higher low. This would be known as a bullish bottoming pattern, a Gartley pattern, aka, and this would be bullish if you can hold the higher low structure. Let's see if that pivot coming up on the 4th marks the next low for us in a higher low structure. That would be fantastic. Could the pivot send it lower? Of course it could, but again, how do biases normally play out? You rally into a pivot, oftentimes produces a top, sometimes to the exact day like the all-time high. You sell off into a pivot like we just did, bottoming the day after, 15.5% rally to the upside. So we got a big bearish red candle today. Let's see if we hold that higher low structure, key market structure, and see if that gives us a pivot to the upside. We look at Bitcoin on the daily. You want to pull your fibs from that April 7th global low where the S&P bottomed, everything around the world bottomed, including Bitcoin. Got your big rally up. Capitulation back to the downside. You look at your 786, 85.5. Your market low is 80,632 on this sell-off, right? And again, what is the point of looking at this? Market structure. Because everybody wants to forget about trend. They have all the little expressions, like I said last video. The trend is your friend until the end. But then they all want to tell you the market's collapsing, Bitcoin's going down 90%. And when you look at the trend since 2022, guys, just basic trend analysis, anybody on X or YouTube can do this. You look at 2022, there's your low. All-time high, higher low. All-time high, higher low. All-time high, higher low. This key is your market structure, 74.5. You want to stay above 74.5. The trend overall is intact unless 74.5 is taking out, and you're just under 85K. And in a near-term trend here on the daily, if we expand this, open this up, your near-term trend, you have a bullish bottoming pattern forming like I just showed you. Your Gartley pattern, there's your low, 80,600. See if you can hold that. You bounced up, made your midpoint. Now you want to hold the higher low. Can you hold the higher low? If you do, with the bullish catalyst coming, your next target's going to be 100K up here. Okay, 100K will be your next target. Hold this higher low structure. Let's zoom in over here on the 3-hour time frame to look at this. You look at this on a 3-hour time frame, you can just pull your near-term fibs there from your little sell-off low that you made on the 21st of November up to that little rally high. You got just below the 618 at 85.3, and you're sitting here at 85K essentially. You have 83.2, 81.8 as future supports, and obviously if you swept that low, you want to stay above the 74.5, right? That's the key point. But as of right now, again, this is just a small pattern here on the 3-hour, but you can see it on the daily forming. You have a W that's forming, right? You have a W that's forming. See if you can hold the higher low. When you take out that midpoint of 93K, your next stop is this next fractal corridor, which is the 100K corridor. That's where Bitcoin will go up to. Want to hold the higher low structure and absolutely need to hold the key market structure above 74.5. But that's not in danger right now. And again, when you just to click back on it for a second, look at the stock market. Just understand. I can't say this enough. Understand what's happening in the stock market. Since October, since early October, people have been going on different podcasts. These big name guys, the same recycled guys that go on all the podcasts. The market's getting cut in half, going down by 70, 80%. This is the top. I'm calling it. What happened? You got a pullback, new all-time high. Then they all did the same thing again. This is the top. I'm calling it. And what happened? I told you guys I was expecting a pullback. What did we get? I said 3 to 5%. We got just over 5% here in futures. And where you are right now is less than 1% to 1.5% away from a new all-time high with massive bullish catalysts coming in the market. Just understand that, because the next stop is going to be 7,500. And I don't think you're going to see the markets rally like that and crypto just stay suppressed. At a bare minimum, you're coming up to that 108K at a bare minimum. 25, 30,000 points higher than you are now. So let's look at Ethereum. Ethereum, what's your bullish structure? Your April low. April low is 1384. If you get slippage here in Ethereum, you're at 2746. Look at your W. I mean, you can see these, right? When you start trading with these Gartley patterns all the time, you just see them. You have the W. Doesn't mean you cannot take out that low. There's nothing magical. But if it holds this higher low structure above 2620, this is a bullish reversal bottoming pattern to the upside, okay? So you want to hold that higher low structure. If you get slippage, where's it going? 2384 to 2750. How do we know that so confidently? That's all your candle structure right there. That's where you'll go if you get slippage, still higher than your April low, key market structure still intact. I have Ethereum going to 6K. I think you'll see that Q1 2026. If we pull the fib from your all-time high down to your current low at a bare minimum, if I am wrong, I expect to see Ethereum come up to where? 618, 786 kill box, 4,100 to 4,500, and then you can make a decision. Is it failing? Is it breaking out to the upside, taking out your all-time high? But this is a big rally that I want to participate in. This rally up to the 786 is a 70% move, 1,850 points. And again, if you go to 6,000, obviously an exponentially higher move in Ethereum. And again, that's my base case. You can think I'm crazy, but I think I'll be right. Let's look at Ethereum on a 3-hour. A little bit more closely here. Fractal support, 2702 and 2620, right? Want to hold those two levels. You're at 2750. If you get any more bearishness in the market, you could be in this corridor. Guys, these look like buying corridors to me. Again, this is just something that I'm looking at trades, looking at buying, because again, that next level down was what, 2620 or 2384. So you want to stay above 2620 or else it opens up 2400, and you can see that right here. And just here on a 3-hour chart, guys, it's the same thing. This is a bullish bottoming pattern. It's a fractal pattern. Fractal is a self-repeating pattern. If it can continue to hold the higher low, start reversing to the upside, when this triggers, you'll see a breakout in Ethereum. Once you get above 3,100, you'll see a breakout in Ethereum to the upside. Has it bottomed yet? Well, that's what remains to be seen. This is why it's a market. It's gambling. Two sides every market, bullish and bearish. I'm bullish on a market, looking at the cycle. Stay above 2620. Watch these buying opportunities down here. If you hold structure and if you start capitulating, opens up the door to 2,400 in Ethereum. Look at that Solana. Same thing, zoomed out, daily time frame. Look at Solana. April low, $95, right? Now you're back at 124. That's crazy. When we did our long over here in this range, 94 to 105, we did that long. I never thought as we were going up here that we'd be back here at 124 looking at this range. Key market structure, low, high, low. Higher low still intact in Solana. You want to stay above 121. That's your sell-off low. Being that you're at 124, you may get slippage. Where would that slippage go? We talked about it last video. 111 potentially, right? Opens up the door to 111, and that's kind of your last opportunity to keep the higher low structure intact. Although Solana doesn't drive the market. Obviously, Ethereum's the biggest altcoin, Bitcoin's the biggest crypto. Those are your two market drivers, and you'll see more beta with this, but watch Solana. It has the same pattern. I think I have it here in 3 hour. Yeah, 3 hour. Have the exact same pattern that you're seeing on Bitcoin, you're seeing on Ethereum. You have a bullish W bottoming pattern, a reversal pattern. If you can hold the higher low structure, if you don't, opens up 111. My upside Solana targets when the cycle commences post rate cut by the Fed. 350 was my base case. I have targets up to 500. That's my Solana targets. Again, Q1 2026. Markets video will be out Wednesday. You guys enjoy. I'll talk to you guys on X. Hope to see you in the Discord.